So you are one smart cookie, and you have decided that you care about your credit score. What? You haven't? Then click the link above and watch that video first. Well, if you're going to take care of your credit score, then it's going to be useful to know what it's composed of and what you can do about it. Unfortunately, there isn't a precise formula where you can type in your age, your wage, your debts and bills, and boom, calculate exactly what your credit score should be. As a result, you might notice that the 3 major credit reporting agencies give you different scores. In my case, Experian gives me the highest score, and TransUnion thinks I'm a loser. Forget you, TransUnion. This graph shows what percent of your credit score is determined by different factors. Payment history is 35% of your credit score. Credit utilization is 30% of your credit score. And then there's a big drop in what they care about. Credit history is 15% of your score. Credit inquiries are 10% of your score. And finally, your types of credit are 10% of your score. 35% is payment history. Did you make your payment on credit and debt on time? Pay at least your minimum credit card payment on time, as well as any car loan or mortgage that you have. AutoPay helps with this. 30% is credit utilization. This is how much of your credit that you use. So if you have 2 credit cards with a $500 credit line each, and you run up each of them $150 in 1 month, then you now have a 30% credit utilization rate, if you maintain a balance. However, if you pay off your credit cards in full more than once a month, you'll actually end up with a 0% credit utilization rate, which is different than having no credit utilization. To improve your credit utilization, never max out a credit card and never make a purchase on a credit card that you can't afford in cash. Pay off those credit cards more often than once a month, and preferably set AutoPay to pay them off in full every month in case you forget. To further help this component of your score, you could increase your credit access by applying for additional credit cards or requesting a credit limit increase on your current cards. %15 is your credit history. If you're young and you've simply never needed credit because you're responsible, you're going to have a low credit history component to your credit score. This is the average age of all your credit lines to date. The only way to fix this is to keep any current credit lines open, and if you don't have any credit, a lot of credit, or very many lines of credit, then you'll probably want to acquire some more, gradually, over time. Once you get to where you have more than 2 credit cards, you might find that you don't automatically use all of them. So what I do is keep all of my credit cards in my safe, and at least once a year take them with me to go shopping, and then pay them off. %10 is credit inquiries. Specifically, this refers to hard credit inquiries, which require your permission and are typically what a lender will use to decide if they are lending money to you or offering you a line of credit. Soft inquiries can happen without your say-so and typically happen when you check your credit score yourself. Hard inquiries affect this component of your score. Soft inquiries do not. The amount that your score goes down from a hard inquiry can vary. I've seen mine drop about 10 points over it, but I'm also quite young, and some older gentlemen have seen it only drop 2 to 4 points. Your score should recover after only a few months. Don't be scared of this one. Your credit is a weapon, and as nice as it may be to say you have this shiny silver sword hanging on the wall, that's your 800+ credit score, it's kind of pointless if the sword has won no battles for you. 10% types of credit. It's not just the number of credit accounts, but how many kinds of credit accounts you have. There are 3 kinds: revolving accounts, installment accounts, and open accounts. The first two report on your credit every month, but open accounts will only report if there is a problem. You make your own choices, but I'd get a variety of credit types. For instance, in my case, I got a car loan, primarily to add an installment account to my track record. Yes, this will temporarily ding your score when you first open a new account of some sort, but it also puts more data into your credit score, which will make it stronger in the future. Naturally, don't take on new debt that you can't afford. To be able to see your full credit report, which will include your credit score, use the link in the description below to do so. I recommend that you pull your credit report every 4 months, once for every credit agency, particularly if you don't have other credit monitoring services at your disposal. So, what's a good score? It depends, but I'd say 740 and above. My reasoning here is that, generally for a primary mortgage, you can get all the best rates if you are at or above 740 with a little bit of variability, although my lenders say that for some hard money or secondary financing, you might need more like 760 plus to get the best rate. If you'd like to see more, subscribe and tap the notification bell. If you'd like other people to be able to see useful information like this, then click the like button so that YouTube shows this video to other people. Finally, comment down below what you would like to see next, and check out the channel for other finance, investing, and self-improvement videos. You only have one life to live. Grow it relentlessly.